And we'll say good afternoon. Good afternoon to everyone. And the markets have given a middle finger to the policy folks. Let's make sure our mic is open. If anyone's got any questions on what it is you're seeing, let us know. But a big reversal day in these markets most likely are going to need to go back down and revisit those lows. When we get there, we'll be able to have a better idea whether or not they're going to break. Any questions, let us know. We're going to let you watch. And we'll say good afternoon to everyone. Hope you had a wonderful weekend. And the markets came out a little hot last night on a Sunday night and stayed up and into the morning session. Mutual Fund Monday, right? Mutual Fund Monday. They love to do that sort of thing and mark them up. Buy the S&P on Thursday or Friday. Mark them up and stuff that crap into everyone's 401ks, IRA accounts, and then pull the plug. Maybe, maybe we look at the 5 minute interval here. We'll just go ahead and mark it up a little bit, and let's start with the VIX. And bear with me here. We'll get a marker, and so we look at the VIX, and whoops, wrong color. VIX green, and the VIX goes long at 1140. At 1140, the S&P went short at 1115. So a little bit before. So in this case, the VIX didn't lead. The VIX was responding. The NQ short at 1105. The Dow short at 1125. The Russell just can't get out of its own way at 1115. Gold, not wanting to give up much ground. Oil. Any questions? Let us know. You know, these tariffs. You know, there's a lot to consider in these things, and not the least of which, if you have a small company here in the States, you might have a company, might be a husband and wife team. They're manufacturing something, they're buying some parts, and maybe they have themselves you know, $3, $4, $5, $5 million company, and maybe it has just a handful of employees, which many of them do, and they're selling some widgets. Those widgets, those parts, probably safe to say that that supply chain is coming from China. And if those parts suddenly go up 150%, well, you can do the math. What's going to happen to their business? It's going to put a whole lot of hurt on those small businesses. It doesn't give them much chance to redesign, redeploy, and so we'll see. We'll see. This trade imbalance isn't something that cropped up just in 4 years. This trade imbalance has been something that has been systemic for the last 3 to 4 decades. And to think that it's going to be solved in 2 to 3 months without any disruptions at all, I think is naive. But we'll see. But these the small caps are no, I just think they're going to have some issues here. We're also keeping a very close eye on the interest rate. This is the interest rate on the 10-year Treasury. Everything in the world is priced off the 10-year Treasury, including even the markets. The yield currently is 4.4. It's made a dramatic move up. If this yield gets above 4.5, there's going to be problems in River City. There's going to be problems in the United States. There's going to be problems around the world. There are going to be problems for these risk assets. But we're going to stay away from, you know, the politics and policies and whatnot. We're going to stay away from that, and we're aware of it. We hear it, we see it, and we're going to just trade mechanically, robotically, extracting cash flow from the money flow, taking our opportunities where we can, and trying to get to the sidelines as early and as quick as we can each day, each week, and not give it much more thought. But we're around this, and we're all participants in these markets, and it is going to be interesting. The daily, I can just change this all to a daily, and Daniel showed us how to do this. Daniel's one of our Q schools. Says, Don, you can save yourself a few steps. There we go. We changed this all to a daily. And what do we see? We see the VIX 33 days ago long. And yes, it's no longer, it's not as fearful, but boy, it's still very fearful. The ES has been short for 35 days, 29 grand, 34 days, 36 days, 79 days, even longer. It was long before Trump. You know, this goes all the way back to December 18th. Look at gold, 66 days. And here is the yield on the Treasury, 2 days, headed up, trending up. It's a problem. It's going to be a problem. So we'll put it back to a 5 minute. I mean, we're active traders, and we like to keep a view of that intraday, but we'll see. If you've got any questions about who we are, what we're about, don't hesitate. And this tool in particular can be used a number of different ways. We can use it intraday on futures. We can use it both intraday and on a swing basis for stocks and thereby options. Beautiful for options. And we can also use it for investment decisions for sure. Absolutely. Happy to plug it in and take a look at any stock that might interest you. In the meantime, we're going to let you watch probably up until about 2 o'clock, and then we need the screens. We're getting um, well, we got a lot on our plate this week for sure. So good luck, everybody. Hope you're having a good day. Hope you had a good weekend. Any questions? Let us know. This is on a daily basis. On a daily basis, you can look at this so many different ways. In from a technical standpoint, it is what it is, and that is we've had a hell of a counter trend. It's a counter trend move, and we gapped down there a couple of days on the panic, and we're not obligated to fill those, but we did come up and fill them. So now is decision time, and the our Nicholas tool issued a warning, an inflection point warning on Thursday. Usually within 72 hours of those warnings, we either break, viciously up, or viciously the other way, or in this case, up or down. And I'm inclined to think that it's going to be down. Um, Mainly because that is the dominant direction, and that the trend is your friend, and it's true. And when the markets are trending up, they're your friend, and they can do that for weeks and weeks and months and years. um, but the trend is down, and we think that this bounce is just that, is a, sorry Gracie, but a dead cat bounce, and that these markets are going to break again. Now, what could be interesting here is that this is a holiday week, right? Friday, we're in Passover, I believe. We're also going into Easter. Friday is Good Friday. Um, so there's generally, the Wall Streeters love to take, a week before and a week after. They don't work that hard, and volumes could be light. Historically, this week is usually up, you know, 70-80% of the time. So flat to up could still be the case, but could there be a little bit of a jailbreak where people say, you know what, I got really spooked there. I got really scared, and this little bounce, I'm going to sell into it, and I'm going to get the hell out of the way. And if that accelerates, or we break down, tomorrow, we could see a real fast acceleration into the holiday weekend. It's entirely possible here. So we think that this is going to resolve itself, like, at the outset tomorrow, by tomorrow afternoon, for this week. What it's going to do. So we're watching with you, and affecting our trades, bringing the cash register. We did. It was just hard to believe, but it was a week ago Monday when nobody wanted to buy anything, and everything was in panic. Everything was in panic sell. The VIX was in euphoria on a daily basis. We said, you can just throw a dart. I mean, and take a spot. So rather than take multiple positions, we took one position, and this is for position trading now, which is stuff that we take overnight. We draw a distinction between intraday monies and position monies, and we came in and got call options on the S&P cash. And we did two of those contracts a week ago Monday, within minutes of each other. We felt that good about it. The following day, the markets bounced. We cashed out one of them, and then the last one we cashed out this morning. And that's where we be on our positions right now. On a position basis on the daily, it's in the middle. It's in the middle of the river, and it becomes, for position basis, becomes a little more difficult when you're in the middle of the river. So we're just going to wait and let's see how they want to play this out. And we'll just do our intraday trading, which is exactly what we're doing today. Any questions, let us know. And if you want us to punch anything up, if you want us to punch in your favorite market or stock, we can do that too. Enjoy. We'll say good afternoon to everyone, and hope you had a great weekend. We're giving you a glimpse of the markets. They popped them a little bit last night, Sunday evening. They carried them over to the morning, and then reverse course. So if you look at your daily charts on just about any style of chart, I mean, you can see the gap downs that we had in the panic, and we don't have to fill gap downs. They don't have to get filled, but they did get filled, meaning we've come back up and traded into that. Now we're in the middle. And let me show you what I mean. Let's change all these symbols on Swing Machine. We're not going to go to a chart. We're going to stay right with Swing Machine. We'll go all symbols. And let's just change this to a daily view. So what do we see? What do you see? Well, you see a VIX that is long, 33 days ago. It's still long. The VIX hasn't even dipped. Now it's off of its highs. It's up in here. It has pulled back. You might want to pay attention to this 2380 number. What is the VIX? It's a fear gauge. It tells us what they're doing and what they're thinking in the options market. The options are leveraged. They go out days and weeks. And they're very, very popular, not just with retail people, but with the hedgies. So we've come back to the middle. The ES. So a week ago today, the VIX was in euphoria. The ES was in panic. And everybody was fearful. Everybody was puking. Now, we also had another tool. We had the skew up. I won't put that in. And that had come back in. And what did we do? We held our nose and we bought some call contracts. Now we've closed them. Now we're in the middle. And this is where it becomes, on a daily basis, it becomes a little more difficult because we're in the middle of the river. And we could continue to pop up, or we could turn right back down and turn tail and head right back down and revisit those lows. We absolutely could. What else might we see? We're going to go and take a look at that and think about it. Here we got gold. We got gold that went long 66. By the way, these are days. So this was, 33 days ago. So the VIX didn't lead. It didn't give you a heads up. It reacted 35 days ago when the ES went short. The S&P went short at 60.22. Now, if you're an aggressive trader, professional trader, you're doing this for a living, yeah, if you got a mini contract on, you're up one contract, you're up 29,000. One micro, you're up 2,900. 10 minis, you're up 290,000. But even if you're an investor, how much could you have saved if you just maybe trimmed, sold into this? The market it's pulled back further than this off the highs, but this 9.6% is from the signal price to where it is now, right? And it's went lower. We a week ago we were underneath 5,000. So that's what that means. And you look at the NASDAQ, 49,000. Now these numbers are we always got to be careful how we present this. You must have trading experience to try to get in here and capture these types of profits. You absolutely do. A person who doesn't have any trading experience isn't going to have the confidence to stay through the swings one way or the other. They just won't. You won't. That's an acquired skill set that has to be developed over time. Think about Rory McIlroy the other day. You think he had some emotions going through himself? Yeah, I mean, he was physically and emotionally drained by the end of that round. And he had to call upon his previous experiences to get through it, right? And in the end, he did. We don't have to play the Masters every day. You don't have to do that. but was a lot of stress and a lot of emotion that he was fighting those inner demons. And it's all physical and mental for him. Here we get to use machines that can actually tell us what the distance is and how far and what the wind is doing. It's telling us. We look at gold. Gold went long 66 days ago. 66 days ago. If you had purchased a gold contract, you got 48 grand. A couple of them, 100 grand. Now, this is where the problem lies. We put this up here. We want everyone to see it. This is the yield on the 10-year Treasury, the biggest, deepest market in the world. Critical to everybody here in the States and China, Europe, everything. It's the biggest, deepest market, and everything is priced off of it. And the yields are rising, and they've risen considerably. That's why these markets cracked. And it's coming up, it's trending up. We're currently at 4.383. If these yields get over 4.5, we got problems. The American economy's got problems. If the American economy catches a cold, or worse, other economies could. We'll see. Oil can't get out of its own way. Part of the issue for oil might be, some of these hybrid cars too, not just the electric cars, but the hybrids. Oh, these things get a lot of miles to the gallon. Bitcoin, struggling, selling down. Ethereum has been crushed. 66 days ago, it goes short. It's lost 50% of its value. 50%. So if you're a hodler of Ethereum, and you had $100,000 worth, you now got 50. That's going to test one's resolve. Now you can say, it's going back. Oh, maybe it's going down 90%. The unfortunate part of it is you could have hodled it, but you could have come into the futures market and shorted it against your stack, and you'd still have much of that value still with you. It's called hedging. Check this out. Yen. We told our members this. We told YouTube this. 48 days ago, not that long ago, Swing Machine goes long at 67 cents. Told everybody what Susan and I were doing on a position basis. On a position basis, we were buying yen contracts. Not going to say how many, but let's put it this way: it's more than one. Underneath 65 cents. And we be holding. We may be holding that position for weeks or months, maybe longer. We're holding. And here are the other currencies. Look at the euro. The euro. 30 days ago, at 1.07, you could have bought a euro contract. How much money did you need? About 3,000 to 3,500 or so, thereabouts. And you got 9. Almost a 300% return in 30 days. And if you shorted the American dollar, because Swing Machine did, you'd be in great shape. You would have tripled your investment in 30 or 40 days. Let's slide this back, though, to a 5-minute, which we can do right here now. Go all symbols, and we'll go back to a 5-minute. We'll change them all back to a 5. Intraday. Now, I saw something, I don't know who it is. I'm not looking to pick a fight with anybody, but I saw something, a gentleman came through, and he's got like 50,000 followers, an investor. And he says, I wish I had the tweet still, but you've seen him, but he's probably a stock pimp, a dividend pimp. It was something dividend. And he said that he had invested, now think about this, he has $1.5 million $1.5 million in S&P stocks. And he showed, he's in the SPY, not just the SPY, but he owns Microsoft and yada, yada. And they're all dividend paying stocks. And he said, let me get a calculator out. He said he's getting $8,000 in dividends a month. And look at me. All right, let's do some math on that. He's got 1.5 million. 1.5 million. And he claims he's getting $8,000 a month in dividends. And he probably is, right? At least he was. Dividend is just a percentage of the share price that the companies that maybe not growth that they pay you. I think it's a bit of a sucker's play, but in any case, it's okay. I mean, I'm not going to, plenty of people that do it. But so the yield on 10-year Treasury is, where are we here? We just had it, is 4.3, 4.4. Soon to be 4.5 and higher. But let's give him 4.3 times, let me see if I get this right. 3. Point being is, if you took your 1.5 million and you bought 10-year Treasuries, you would pick up $64,500 a year. Now, I'm not saying anybody should do that because I think interest rates are going higher, but you'd pick up 64. So how much is that a month? Divided by 12. So he's claiming he's getting 8,000. This would be 5375. So 8,000 minus 5375. So he is taking risk to realize an additional 2,625 a month. Now you could calculate how much is that a year. There's 12, 30, an extra 31 grand. How much is that? 31,500 divided by 1.5, 2%. 2%. So he's taking market risk with 1.5 million to pick up an additional 2% income. Now, what's the risk for him? First thing, too, I don't know if that's in a retirement account. He's also got to pay taxes on the dividends and, whatever. But what if Microsoft goes down by 30, 40%? Or Intel, some of the other shit that he's got, dividend. What if the S&P is down? Now, the S&P is down 20%. So I'm assuming he did that. So he may have his dividend stocks, but at 1.5 million, you guys are faster at the math than me, times 0.2. He has lost $300,000 in value with a 20% correction. So how many years is it going to take him to get back that 300,000 with the dividends? It's going to take him like 10 years to get it back. And so I asked him that. I'm like, well, how long is it going to take you to get it back if you lost 20%? The other thing is, what he doesn't know is, because he doesn't know what he doesn't know, what if he gets another 20%? What if the markets go down 80 and 90%? And then here's the real kicker. If interest rates continue to shoot up, what do you think Microsoft's going to do and Intel is going to do to their dividends? They're going to cut them. There's no guarantee. They're going to cut them. They're absolutely going to cut them. So what did he say he did? He said, oh, don't worry about me. I'm selling calls. Oh, okay. Now, writing or selling covered calls is a very good, relatively safe way to get introduced to options and a way to generate additional income. I call it getting dividends on steroids, with one exception. When you write covered calls, you've got to be doing it on a market that is flat to going up. You do not write covered calls in a market that's going down. That is death by Ruru. And when he said that, I didn't respond again, but I smelled total bullshit. Total bullshit. In fact, and I was really tempted, so I'm not even going to say who it was. It was just somebody on the Twitter sphere, again, with 50,000 followers and a stock pimp, probably with I think he actually had an investment company. But I immediately thought, who do I think of? Bernie Madoff. That's what I think of, Bernie Madoff. Bernie Madoff was, if you can research him, but he at one time he was president of the NASDAQ. And then he proceeds to go out, and his whole shtick, he was running a Ponzi scheme, right? He wasn't investing any money. And he was soliciting money to manage. We don't do that, right? We don't do that. Not soliciting any money here, by the way. If anyone's coming through and hearing my voice for the first time, we don't manage anyone's money. We don't make any specific recommendations. We just, it's just a private club, and you could research this further and make your own financial decisions, a lot of which, highly personal. It depends upon, how much money you have coming in, how much money you have going out, and how old you are. Critically important, right? Everyone will say, you want to buy and hold. Well, that's fine if you're 25 or 30. But I got to tell you, kids, if you're 50 and up, you got to be really, really careful with that buy and hold thing, or you might be working until you're 80. Now, I'm going to be working until I'm 80 because I love doing what we're doing. And, God willing, and I just, will always be working because I just, for me, I just love it. But if, if someone else is looking, maybe to go do something else, and they don't want to be working for the man or having a boss or conference calls and all that bullshit, and you're 50 plus, you better be damn thoughtful about what it is you're doing. Because so when this guy said he's selling covered calls, I immediately said, oh, what bullshit that is. I'm calling bullshit on that. That's bullshit, because it's really, he was providing just let's put it this way: you can bullshit the fans, but you can't bullshit the players, right? So when Bernie Madoff used to do interviews, and you can see them online, and he would just, oh yeah, I'm just selling a covered call strategy, and it took a guy who ultimately, exposed him, to try to run the numbers, and it was just not possible. Covered calls have their place, but the market needs to be going flat or up. But but anybody saying, buy and hold, and oh yeah, I gotta have dividend stocks. I mean, you can get killed. I mean, if you lose 50% of your principal and you're holding a bunch of stocks that are down 50%, and just because they're paying dividend, it'd take you years to get that money back, right? I mean, it's just, So but I'm not in any way, shape, or form. I'm not just kibitzing with you here, suggesting anybody do anything with their money or think any particular way with their money. You do your own research. You think it through. You've earned it. You've saved it. You're entitled to do that, and you should. And I think that there's a place and a time for some of that. But I mean, you can look at some of these stocks here. I mean, it's just been, let's go look even at, let's slide over here. Let's see. Bear with me. Do we have? Yeah, I don't. I'm not going to change on us here. I may not have the right chart set up, but you can see. So, I mean, some of these stocks have just been hammered. Stocks. They're already down 30, 40, 50%. So it's going to take a whole lot of years if they maintain that same dividend to get the money back. So, and by the way, please look on YouTube on January, I think it was January 19th. January 19th, it's time stamped. We did a YouTube video. We showed everybody the point and figure on the S&P and on the QQQs. And we said, if they break a particular spot, they're going down to this spot. Go look. Go look. We absolutely nailed it. It's the price action. Now, we're down there. They're forming a point and figure triangular pattern. And I'm going to tell you, folks, if they break to the downside, which I think they might, it is going to be like shit through a goose. It is. We will go down another, I think, another 20%, and it will happen fast. So, any kind of a rally. Now, could we bust up from that? We could bust up and delay it, and it could be something in the fall. It could be. But you want to know, where are the markets? And then more importantly, where you are. Where are you in this game? Right? I mean, if you're 25 and you get, okay, hey, no problem. Buy some shares in $5 stocks and tuck them in and learn how to trade, and no problem. No problem. But if you're 50 plus and you're thinking you're 5, 10, 15 years away from retirement, and you better learn pretty damn fast, because they will take, and don't think they can't. They did it in the .com, took it down 90%. So, any case, I'll be back a little bit later to answer questions. We're going to let you watch. This week is a holiday week. It's only 4 days. Historically, 80% of the time, this is an up week. This is really some pretty nasty action since last night. I want to see where these markets are tomorrow afternoon. That's what I want to see. And we're going to get to test that, resolve. Do keep an eye on these interest rates, though. 10-year. Not don't interpret the 5-minute trend unless you're trading bonds, which probably most retail folks aren't. But that's the rate. I'll be back in a little bit. Enjoy what you watch. Okay, everyone. They're pulling things back up intraday, right? We're going to back away. Um, I had just stepped away from this desktop, and what do we have? We have at 1:30 on the 5 minute. This is a 5 minute interval. We have the VIX. Excuse me. You guys saw it. Let's take a peek here because it's just it was about an hour ago. The VIX turns down at 1:30. The S&P turns up at 210. The NQ turns up at 220. The Dow turns up at 155. 205. Intraday. Now, by the way, how do you pyramid into trades with, hey, Clark, how do you pyramid into trades with point and figure? Well, we love point and figure, and that's, you know, there's a number of ways, right? So there's a number of ways to trade point and figure too. So I can't give you a definitive answer. This is Clark's. How do you pyramid into trades with point and figure? um, the other piece is we're trading. And the other question here, embedded in this, are you trading point and figure intraday? Or are you trying to trade point and figure on a position basis? So if we're going to be trading point and figure, so if you saw those videos that we made, back in January, we're on the S&P and the QQQs, we used options. And those were big, big, big boxes, long term. Yeah, long term. Yeah, we're going to use long term. So that's a relative term, right? So we're using options, and the sweet spot on our options is 35 to 45 days. We might go 60, but that's about it. We're not going to go any further out than that um, with our options. Now, if we're going to invest in something, going to accumulate something that I think is going to be, I'm going to get vested in a direction, which is almost always going to be long, out beyond a year, then we're not going to use any leverage to speak of. If the market is flat to up, I might sell calls against it and then layer in that way. If we're using point and figure intraday, then we're not really scaling. We're not. We're staying relatively small. We might scale with some micros, something like that, but usually we're just coming in with the position. If that makes sense. We can take a peek at some stocks here. We give folks a chance to see. Let's go to here is let's see. This is the Nasdaq 100. I want the S&P 500. Here's the S&P 500. Let me erase these bars here. By the way, let me erase them. And so here's Swing Machine. We have the S&P 500 loaded in, and I'm going to sort all 500 stocks on percentage return. I'm going to show you all of them. And we'll start with the first one just to show you what this would have shown you. If you had this on your desktop, you get to see this on a video view virtually every night. But if you have it on your desktop, you can load it in with whatever stocks you want. So in this case, it's Moderna on a daily basis. And so let's say that your local boutique broker said, Clark, you need to be in Moderna, like 2 years ago. And you're in it. Now, he'll never call you to say you need to get out of Moderna. Nah, they won't do that. No, no. I mean, they might say, hey, you know something? We're really down. If you average down, we can get more shares. Let's get some more Moderna. Yeah, that's death by Ruru. You never, ever, ever average down. 200 days ago, 200 days ago, on June 27th, Swing Machine issues a short signal. At what price? 121.18. 121.18. So if you were in Moderna, you would have had a decision to make. You can A, listen to your boutique broker and ride it out for the long term. And if you did, you're down to 26 bucks, 27 bucks, and you're down about 77% in that position alone. Or you could have said, hey, I'm going to get out. Thanks, but no thanks. I'm getting out. And if you got out at 121, you saved yourself a 78% haircut. If you had some trading skill, maybe you got out and maybe you shorted her. Maybe. So that's the idea. And we can scroll down what you want to see. Okay, big guy. So these are the number of days, and they're all short. And you might say, oh, well, they're all short, Don. That's obvious because the market went down. Anybody could have done that. Well, look at the times, right? So let's come down and look at some interesting stocks. Let's catch one. So here's a stock that gets a lot of interest. Did AMD, Advanced Micro Devices. 113 days ago, AMD flashed the same thing, a sell at 148.60. Well, could have saved yourself a 35% haircut, or you could have made yourself. All right, so let's scroll down and show you out of 500 stocks. We can't comment on each one, but you can slow this down to look. And if I see, all right, now here's one. This is CME, right? CME. It went long 172 days ago. So it went long. And if you had gone long at 199.20, you'd still be up 32%. Something called CNP, which is Centerpoint Energy. All right, so let's continue down though. So what we want to see, and so they're all longs. There's CVS. CVS is up 30% in just 59 days. That's a pretty good trade. This one here, VeriSign. So you know this is where and how we get them. Right? There's Newmont. If you bought Newmont 24 days ago, you're up 26%. That'd work. The privacy of your home. So let's scroll down, and what we want to look at, how many stocks out of the S&P 500 is Swing Machine up in? So we'll keep going, keep going, keep going, keep going. Some of these are relatively new, some have been around. And I'm going to show you all of them. Keep going, keep going, keep going. We're barely up, but we're up, barely. All right. So once you start seeing the yellow ones, this one's a little bit down by pennies. So 384, which is kind of low for us, kind of low. The yellow ones means we're flat. We're flat. We're not making any money. So roughly 406 out of 500 were either up or flat in a pretty nasty market. Now these, we're down. We're down. And this, by the way, the purse is calculating if you had done it with $10,000. So I want to scroll down. So we are suffering drawdowns. And what is the worst position? Mosaic. We're down 14%. Swing Machine is showing you its position. It's either long or short. You know, it's either dipping. It's either long. It's always in. It's always in. Now you don't have to always stay in, right? You know, so I mean, you decide you want to go in and you want to take your profit. You're free to do that. But Swing Machine is going to help you do a number of things, hopefully. It's going to help you stay on the right side, right? I mean, you don't want to be in Moderna for a 70% decline and hoping it's coming back. Because you go down 50%, like you take something like this, Enphase Energy, it's down 50%. In order to get back to even, you got to come back up 100%. So Swing Machine is meant to help you, and entries matter, help you get a good entry, help you stay on the right side of the market, help you stay in a trade. You got to learn to stay in trades, especially winning trades in the trend. It's a trend identification tool. It is not using moving averages. It is not using stochastics, and it isn't using MACDs. Moving averages, I know everyone's saying, oh, the 50 and the 20. They will not work like this. They will not. They will lag brutally. And it's an optical illusion. They lag very, very badly. But Swing Machine can help you get in, help you stay in, and also help you get out and help you to stay out. I mean, if we're in a definitive downtrend, these are the stocks. What you would want to do is just copy them all, paste them into maybe a shorter time frame Swing Machine, and wait for them to bounce out. I mean, this is an acquired skill set. There's a lot of different ways to play, right? Just like playing at the Masters Golf Tournament. And we can do the same thing. Here's the NASDAQ 100. And we got the NASDAQ 100 in here. And let's see, the top stock is, well, once again, it's Moderna. They share indices. And let's scroll down. Out of 100 stocks, how many are we profitable in? And let's keep going. There's Monster. I don't know what's going on there. So we do have some longs, mostly in the market's been in a corrective phase. So we are profitable in 80% of them. That's about right. And then the yellow ones were flat. And then the red ones we're suffering a draw. And out of 100, there we are. Our worst one is, we got a little 103, 14, 15%. I don't even know what this is. What is that? As an idea. This is a beautiful tool. This is for trading intraday. Now, we got folks that are coming by. You have to define what it is you want to do. I don't define that, right? I don't define that for people. That depends on what you want to do. And there's nothing wrong with let me go here. There is nothing wrong with being diversified in what you're capable of doing, or being diversified with different blocks of money that you have. We do, right? We invest for the long term on some things, not terribly invested now, but we're prepared to. We will use blocks of money for option trades, and we will use blocks of money for intraday trading to create cash flow and to hedge. I think if you're 25 years old and you want to start taking some of your profits and buying every $5 stock out there and just putting it in your sock drawer, I'm okay with that. I'm all right with that, and still learn how to play the game. But if you're 40 or 45 or 50, I don't think that's going to get it done, and you're taking considerable risk. This is these are the currencies, by the way. I mean, this is kind of crazy here, but you could have, for everyone says that our cash is trash. You can't, you got to be invested for the long haul. Oh, really? Really? Did you know that if you had bought if you had shorted a dollar futures contract 41 days ago, how much money would you have needed to short a dollar futures contract? $2,000 to take it overnight. That's how much you would have needed. It's a leverage play, but you would have needed a minimum of 2,000. Probably would have wanted to have, 3 or 4,000 anyways in the account, but 2,000 bucks. If you had shorted it 41 days ago and you wanted to close it today, how much money would you have? About 7 grand. What? Yep, about 7 grand. A 300% return, a 300% return in 41 days in cash. And these kids, that are going to the hoi polloi parties down in Miami and Coconut Grove and Paris, and they listen to the podcast on Saturday mornings, talk about crypto this and crypto that, and they have their Cosmos and Bitcoin's going to go to $500,000 a coin, and Ethereum's going to go. Okay, yeah, sure. Good luck. Let me know how that works out. Let me show you. Let's go back to the daily view for a minute. And if you want to do that, fine, but at least learn how to hedge. Let's say that you had Ethereum and you're hodling it. In 66 days, your Ethereum hodl coins have lost 50% of their value. Put yourself in that trade. Put yourself in that investment. I hope you're not in that investment, because everybody knows Ethereum is better than Bitcoin. Well, maybe. When's this bitch going to stop going down? Maybe it's going to zero. Maybe. No way. Well, maybe. It's now got to go up 100% to get back to even, because somebody bought it up here at 3,200. Somebody bought it at 4,000. If you had $100,000 in that, you're down to 50. If you had $1 million, you're down 500,000. I get news for you. That's going to grab your attention. That's going to test your resolve. It actually may test your sanity, especially if it goes down 90%. It's one thing to have $1 million and then wind up with 100,000. I don't know where Bitcoin's going. Bitcoin's already lost 12%. Could it go down 50%, 80%, 90%? Yeah, it could. It could. Don't tell me it can't. Because I already know, I've been around these markets. I'm not from Wall Street. I'm not from Madison Avenue. But I was around during the .com. Saw it. It was a great time. Love bear markets. Right now everyone's, hoping. Hoping isn't a strategy. It's a good way to get killed. And just because the indices come down 20, 30, 40%, you can say, well, over 100 years, they'll come back. Well, that's fine if you own the indices. But if you own the individual stocks, the indices may come back over time. They might. There's a shell game part of that. Wall Street's got that mastered to keep everyone from one generation to the next, to the next, to the next coming in. But it won't be with the same stocks. It won't be with America Online. It won't be with JDS Uniphase. It won't be with Sun Microsystem. No, those things went bye-bye. And if you had money in them, your money went to money heaven. And gone. And it's gone. So hope is not a strategy. And everyone's got a choke point. Did you see Dave Portnoy? Did you see him choking? Yakking up a bone? He got out there and, Davey Day Trader, buy. He's got the green hammer and, he might be a hell of a gambler, but I don't gamble. I don't. He might be a hell of a gambler. And remember, there was a couple of days last week, one day he had a viral video went out, and he advertises to everybody that he's got 100 million. Well, he had one day where he lost 7% of it. He lost 7 million. He didn't particularly like that. And then the next day, 2 days later, I think it was on Monday when we were buying actually, and he came out and said he lost 20 million. Oh, now that's going to grab your attention. If you got 100 million and you got rich once, lucky, he had a, little gambling business that he developed up there. I'm not taking anything away from the guy. I mean, he's got a talent, I guess, to amass that, whatever. But, you lose 20% of it in like 3, 4, 5 days. It's going to grab your attention and it's going to grab your resolve. Now, is he going to tell anybody? Is he going to get online and say, hey, I'm out? Probably not. Now he's going to bang the hammer, but they're banging out. They're doing. Um, I could make a case that the S&P is going to go back up to its highs and keep on going, and I could make a case that's going to go down 80, 90%. I'm not going to invest on either opinion or scenario. I'm not. I'm going to track the money flow and trade around it, and that's it. Because what I know is whether it's Davy Day Trader or whether it's Rory McIlroy or whether it's DeChambeau, everyone is going to act in their own best interest to make as much money and to protect as much money as they can. And if we can track their footsteps and track what they do, we should do just fine. And the rest of the time, I'm I'm just going to consider any investment advisor, any media hack. If their lips are moving, they're probably either lying or they're completely ignorant. Now, I do like to listen to some podcasts because they're kind of entertaining to listen to, and it's kind of an academic exercise. And I come from a poli sci degree, and I like the history of economic history, but I don't buy or sell or trade or invest on any of it. Zero, zilch, none, nada, not a thing. We'll put this back. And how well can I do trading by reading purely Michael Cobell? I don't know who Michael Cobell is. I don't know. I don't know him. So I don't know. Um, don't know him. We're going to put this back to a 5 minute. Thank you. Sorry about that, Clark. Thank you. So there are only four ways to trade, and I'll try to do this. We always do it a little different every single time. So let me kind of map this out. Is you can counter trend long, and you can counter trend short. And so when somebody says, trend fall, it's true. It's true. But the the key aspect of this is you have to understand the characteristics of each, and then you have to understand the interval that a person is either, if you're taking trades from them and we're not, or you're taking them from the machine, you need, or machines, you need to understand what the interval is, right? So that, that's really, really important. But the characteristics, what are the characteristics of trend following? And I'm going to just make it cyan because um, this is what's important. Whether you're trend following long or short, it is true that they pay on a relative basis the most amount of money. That's true. The other characteristic that is not fully appreciative, or people don't appreciate, so I don't know about this, this individual, but they are infrequent. They don't happen a lot. And the other characteristic is the win-loss ratio is, if you are trend following, is 30 to 50%. This one's really important because, see, if you don't know what the characteristics are of trend following, then you don't know what to expect. You're going to have anxiety, and and you might be getting on the trend and you are getting in the way. You are hurting yourself trying to win. I got to get a win. I got to get a win. I got to win 9 out of 10 times, 8 out of 10 times. No, no, you don't. Nope. In fact, you're probably hurting yourself by trying to get the win. A great trend following system could be winning just 30% of the time, meaning that you're losing 7 out of 10 trades. But that's it. I mean, that's truly the thing. Now, on the counter trend trades pay a little bit. Not a lot, but a little bit. And the other thing about them is that they're so seductive, is that they're frequent. They happen a lot. And so, we can teach trend following long and trend following short. But if somebody just is bound and determined, I want to make $100, I want to make $100, and I want to do it boom, 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 then they're never going to get on the trend. They're never going to make 2,000, 5,000, 10,000. They're just not going to, which is fine. But you need to know. And they're just going to be making a little bit, and they're going to trade much more frequent. But the other piece is they better be very, very disciplined in what they do and very, very thoughtful. And if they are, the win-loss ratio is furthermore seductive because they need to maintain a 70 to 80% win rate. And you might say, well, that's what I want to do. That's obvious. That's what I want to do. Well, not so fast, because you're going to have to work a lot harder than this guy. You know? And what do these trends look like? Well, a trend, this is a very abbreviated view, and I don't have a whole lot of time today, and I apologize. But this is the sort of thing that we discuss in detail during Q School, and make sure that a person. But if we're gonna trend follow, we're gonna go up, we're gonna pull back, we're gonna go up, we're gonna pull back, we're gonna go up, we're gonna pull back, we're gonna go up, and we're gonna pull back, and away we go. What makes this a trend? Higher lows, higher lows, higher lows. Up or down, right? You could do it just the other way. And let's go ahead and do that. If we're going down, trend down, back, down, back, down, back. Exactly what the market is doing right now. And we're trend following down. Here, this in here, counter trend short. Well, let's call right here. If a person shorted here and looks to make a little bit, that'd be a counter trend short. Short here, make a little bit, counter trend. And what are these? These are the dips, right? And so when you are trend following long, you do, ideally, you want to be buying the dip, buy the dip, buy the dip, buy the dip, right? The counter trend is just trying to get these little bits. On the way down, on the way down. You don't want to be buying the dip. You're just going to keep averaging down, and you're going to lose all the money that you made on the way up. You're going to lose it all and then some on the way down. The counter trend long though could come in, could come in. He's machined and understands what he's doing. He buys here and he makes a little bit, and he buys here and he makes a little bit. Those are counter trends. But the trend trader is going to get on this, and he's going to look to not buy the dip but sell the rip on the way down. So here you're buying the dip, here you're selling the rip, and then the counter trend. The issue with all this is that I said infrequent, the market only trends 30% of the time. So we're dealing in the realm of probabilities here. 30% of the time it is trending. The other 70% of the time the market is doing what? Going sideways, up and down, until it isn't, and she breaks. So in this environment, this is where, the counter trender can be seduced into doing some of this until we get the machines to do it. But that's the only 4 ways to trade. And you can sit there with your machine, and God knows I've done it. Susan's have done it. We still do it. And tether yourself to the screen and trade manually. You can do that, but it can be a hard way to go. We're going to use machinery to machine some of these trades, and to use robotics to get some of this trading done. And it's either going to ideally be doing a lot of the interpretation of the heavy lifting for us and presenting the trades to us at minimum, and then maybe executing the trades for us as well. So yes, this is the best way to go in our view, but we still do this. We will still do this. And the interval, what are we talking about? Are we talking about intraday? Are we talking about daily? Are we talking about weekly, monthly? So I hope that makes a little bit of sense. I'll just snap a picture of it because we're going to clear that off here, and go back to what we were doing. So I'm going to clear that off. Now, clear that. And when we're trading now, the other piece is, when a market is making new highs, as the market was, just 5 or 6 months ago, it's at 6,100, 6,200. Everybody is a genius, right? Everybody is, because it didn't matter. It didn't matter when you bought. It didn't matter if you bought the dip, you bought the high. It didn't matter if you bought 6 months ago, 6 years ago, 16 years ago. Everybody is a genius, including all the dead people who ever bought in the S&P. They're all geniuses. And when you get to a place where everybody is a genius, the little hairs in the back of your neck should be standing up, because I get news for you, they're not. They're not. If you heard the interview with Ray Dalio, it was rather shocking, but he said 60% of Americans have a sixth grade reading level. 60% of Americans. I don't know if that's true, but you know what? He's got access to some of those stats. That's rather disconcerting. It might be higher. So, and they're in here. They're in here. They're in these markets, because, the Fed shut down interest rates, 10, 15 years ago, and they couldn't get a return on anything else. So it's just, plow into the market. So you're in there with them if you're doing it. So any case, great question. Thank you. I'm going to have to break away. I hate to do this to you, but we need the screens. We do these little YouTube sessions just to clear the air. I'm not a broker. I'm not a financial advisor. I'm happy to chat and bone back and forth different things in economics. Love history. Love, the political thought. Political thought the other side. But I don't make any financial decisions on that. I don't manage anyone's money. We don't make specific recommendations to buy or sell anything. Um, I can tell you if you bought the S&P at 210, which was just not that long ago, you'd be up 900 bucks. If you bought the NQ at 220, you'd be up 1400. If you bought it at 155, you're up 800. Um, Again, we don't manage money. We don't make specific recommendations. What we do is we serve as a mentorship for those folks that are interested in doing this sort of thing. I can't promise you an outcome, though. I can't. Wish I could. I can't. We can give you the tools. We can share with you at length how we approach it, how Susan approaches it, how I like to approach it, and but then you're going to have to take that knowledge, the tools, and begin to apply them. And you have to go and get something that I can't give you. And that's the confidence that you can hit that golf ball off the 18th tee without crumbling, right? That was amazing, right? The kid was under a lot of pressure, a lot of stress. Trading in the markets doesn't have to be that stressful. My background is 25 years. For 25 years, I was wearing a surgical mask before they were fashionable, which, by the way, they're absolutely worthless in public, right? So I'm just telling you. Growth due to frequent gains. Counter trend trading nets higher geometric growth due to frequent gains. Um, well, um, you can do both, right? And so we have members that are very, very, very good counter trend traders. Um, and we have other members that are purely just trend traders, and we have traders that are both. I will say this, that if you are an options trader, you're going to be ideally selling options, and option trading is counter trend trading. Is almost, I think, I could be wrong on this, um, but almost all of our option trading is almost always counter trend. And I think that's the case with most. We don't trade hundreds and hundreds of contracts, right? There are folks that do that, day in and day out. Um, but I think that's mostly counter trend. The way that we keep score is maybe different from everyone else. We keep score measuring profit factor. So, and it's gross profit divided by gross loss will give you your profit factor. If you have a profit factor below 1, you're a losing money machine. You're just not making any money. If you got a profit factor from 1 to 2, you're making money, you're working hard, but you're putting shingles on a roof. If it's 2 to 3, we consider that average. If it's above 3, we consider that above average, and you're now turning the corner and becoming a money-making machine. If I'm putting on the machines mechanically, I ideally want to have a profit factor above 3. I want to feel good about it. If we're running a robot and the robot has a winning, or not a winning percentage, a profit factor of 1.3, it's very narrow, but I really don't care because it's a machine and I'll let it work its ass off at 1.3. I'm totally okay with that. If you've been trading for any length of time at all, or you've been following anybody, or you've been subscribing to anybody, and they've never told you about profit factor, or you haven't been tracking your profit factor, I'm sorry to say this, and I mean this sincerely. They are wasting your time, or you're wasting your own. I had the wrong microphone open. I can leave both open. We also have a members access port, and we're not keeping that. They may not want to hear. They've heard this hundreds of times. Because most people, I'll ask, well, how do you keep score? And they'll be like, well, kind of stupid question is that? I keep scoring the money. I make money, I keep score. If I make, no, We don't keep score on the money. No. You keep score on the money, you can't play the game. If Rory McIlroy had at all any thought about how much money he stood to make or lose on that last putt, he would have lost. I mean, he would have crumpled earlier. Now, he may have had some other shit going through his head, like his interview with the broad, but Balbonis there, but that's another story. But um, but trust me, he wasn't thinking about the money. And as a trader, you don't want to be thinking about the money. If you are thinking about the money, which is what 90% or higher of people do, because that's what they think it is. That's what they think it's about. No matter what I say, no matter what anyone else they don't know what they don't know, and that's what they think, and there's no changing that. Then they are trading greed and fear, and they will lose. They will choke. They absolutely will lose. Now they may win 3, 4, 5 days, 3, 4, 5 weeks. But the moment they start to fall back, then they got nothing. They got nothing. They don't have a process. They haven't worked through that, and it will grab them, and it'll drive them to drink or smoke weed or get angry or just you'll look like Davey Day Trader. He looked like shit, didn't he? So I mean it sincerely, and I can say it because we've learned it. We tell you the stories. We tell you our lessons, but you can make the same. We made plenty of mistakes, plenty of mistakes. We learned from them, thank God. And we tell you what those mistakes were. And I'm still very, very humbled by all the market activity. Very, very humbled. And don't want to make, we will make mistakes around the edges, but we have zero tolerance for a negative outlier. Zero. We can say that. And we'll teach you how. Now, do you have the discipline, the patience to make sure that you do that? Or are you going to wing it? I don't know. You might. You get caught. Hey, Teddy. All right. Clark, thanks for the questions. Be sure to visit Stock Market Caddy. And again, when I said I was the surgical mask, I taught surgeons for 25 years how to work with the most advanced surgical instruments of the day. And we approach this. Trading in the markets is not surgery, but we approached it as if it was. We didn't draw a comparison, or we didn't make it comparable or comparable to surgery. That would have been a little gross. Susan thought that was a little gross. And so I made it comparable to the game of golf. But it's like any other endeavor: golf, scuba diving, driving fast cars, jumping out of airplanes. It isn't a riskless endeavor. You must like to make decisions. You must be comfortable living with uncertainty day in and day out. I love it because it makes me feel alive. But not everyone does, right? Not everyone does. That's okay. It's all right. They look at me like, "Are you out of your friggin' mind?" And that's why we don't have thousands and hundreds of thousands of people, because it isn't. I'm not trying to say that this is easy. You're going to have to grapple. You're going to have to go out there and on that golf course and compete. You don't have to win, though. You don't have to win. You don't have to, get to the 18th green and beat everybody in the field for the day. You just got to get out there and remain in one piece, right? And get your share, get a healthy profit factor, and get it to the bank. Make sense? All right. So you can visit stockmarketcaddy.com. We're still in the month of April, and we have a Q school, and the Q schools are all booked for April. We're booking we're booking out the rest of the year. We have folks that are reserved into the summer months and into the fall even. And so we have only a limited number of annual licenses. If a person goes through Q School, got to go through it just once, just once. It's 3+ weeks. We're a little flexible around that. Depends on, where the person's coming in and where they're at and what they're trying to achieve. But if they decide at the end of that Q School to become an annual member, then they're going to get all the tools they got to work with during Q School and then some. Right? We got other tools. They're proprietary radars, proprietary indicators, proprietary strategies, and they come in and out of favor. Right? So you can't, you always love the kid like, hey, teach, just give me the cliff notes, man. I don't want to read the book. I don't want to, I just want the cliff notes, and I don't want to go to class, and I just want an A. Nope, you're gonna have to learn, and you're gonna have to apply. Sorry, it may look easy. All right, but Swing Machine is, not an ATM. He will kick out losers, and if you're not prepared and you don't get it and you don't understand it, and that's why we don't sell Swing Machine. We don't. We don't sell any individual program. None. It's a private club, and you either join or don't, which is fine. And we're trying to give everybody an opportunity to learn and then say, nah, you know what? Nah, this isn't going to be for me. I don't want to do that. And that'd be all right. We hope not, but you might say, you know what? I want to go buy Ethereum and hold on. Okay, well, good luck, or gold or something. Would have been all right. Um, but we're trying to give folks, that opportunity. But if you say, hey, this is something I want to do as an annual member, you get everything. You get everything I have, and then you got all the instruction around it, and then you can begin to piece it together on the game you want to play. So, Clark, you want to trend trade? Great. I think that's, we're going to lean on you to try to do that. But you want to do some counter trend trading? You want to use these tools to trade some options? Um, that's who we are. That's what we're about. And I do, I do see the Twitter sphere. I don't see anyone doing what we're doing. In fact, I see everyone doing the same thing: drawing out candles, moving averages, trend lines, cup with handle. Let's throw in some narrative bullshit about tariffs and Trump, and let's chat about the Federal Reserve, and let's chat about Bitcoin, and let's chat about inflation, deflation, and what the tariffs are going to mean. Just a bunch of bullshit. It just is. And the market is always the noisiest on the way down. But we take one last look with you, and this is what we say. We haven't even been able to rip back up. We haven't even been able to counter back up. Let me show you. All symbols daily. I mean, there's no time stamping this. It's already time stamped. The ES trend is down. Now, if they counter, there's a little bit of pressure up. You can see it right here, a little bit of pressure up. But if we got into a counter trend, it would have said rip here, rip, which is still short, but a counter trend. We couldn't even do that. These markets, in my view, very, very weak still. Very weak. Very weak. And so I know nobody wants to hear this, and I hope you haven't been hurt. But if you're sitting, and you're older, and you just got a 20% haircut in your retirement account, um, and you're thinking, well, okay, that's over. Whew, thank God I'm not going down another 20. Yeah, you could be. I don't know. Nobody knows, including Trump. I mean, you could be down another 20, 30, 40%. NASDAQ we had a lot more going for us in what was it, the year 2000, March of 2000. 9 months later, the NASDAQ goes from 5,000 to 900, down 90%. 2008, we all knew that was coming, and we knew the dot-com. We didn't know how deep it was going to go. You never know how deep they're going to go. And then the '08 thing, we all knew it was coming. It was late in coming, should have come much earlier. And then they just squeezed that in for political purposes and ushered in Obama and the Marxists and the big money print. And but but even then we got a 70-80% haircut, but it didn't come back with the same stocks, right? All the housing stocks and countrywide lending and all that bullshit, they all went away. Then what do we come out with? We come out with social media crap. I mean, that's crap. I mean, you tell me Facebook, faceplant. I mean, AI might wipe out Google. I don't know. Do you guys use Google anymore? I don't. I use one of the AI. I use Grok. I mean, they could go bye bye. So, but these trends, the VIX is still trending up. It's still trending down, which tells me any kind of rallies, s- you know, which we haven't even got into a rip, really going to be an opportunity to do what? To sell. And until these bargains can turn around. And on a daily basis, when they were trending up, they were here for hundreds of days. And it was the same thing. Be like, yeah, we got to buy the dip, I mean, I was suspicious of it all and didn't like it, but yeah, if the money's flowing in, the money's flowing in. All right, so let's throw this back, and I'll wait a couple of minutes to answer any other questions, but then I really do got to break away. And if I said anything that is giving anybody angst or giving anybody a hairball, let me know. Happy to chat it out. We don't tell anybody. I don't. I don't tell anybody how to think, what to think. I really don't. Um, I tell you what I think. I'll tell you how we go about it. Tell you how Susan goes about it. I'll tell you how we thought it through. But but it's going to be up to you, because in the end, you're going to play what you're going to do what you want to do. But we're going to be able to tell you, you might want to be considering this approach, these markets, these tools, hopefully to get done what you want to get done. And and I can't, person's going to do what they're going to do, right? But big part of this is patience, discipline, patience. There are 24 trading days in a month, 24. If you take Fridays off, there are 20. $100 a day is 2 grand. Do you have the patience for 6 months to do that? No, no, Tom. You can set swing machine. Tom's asking, does it always use 5 minute? No, no. You can set it on any interval, and you can actually use ticks. No, no. We set it on 5 minute just to slow it down in this view. But no, you can set it on any interval. And then do you have the patience to do that, for 1 month, 2 months, 3 months, 4 months, and build up your trading confidence and build up your trading war chest? I know in the beginning, I say this to everybody, in the beginning, when you're first getting started, you're like, okay, I gotta go. And we don't want anyone trying to target a number. You want to be targeting a process. You want to just, have a pre-shot routine, have a pre-trade routine, have a pre-trade routine, and just execute that routine. That's what Rory was doing yesterday. That's what they were all doing. He ultimately won it, but the others were doing it. They were doing what they do every single time they approach a golf ball. They weren't, okay, it's the Masters and I'm looking at the crowd and I'm getting excited or anything. How about that guy Justin Rose, right? Talk about having ice through his veins, right? The guy's done it a million times. It's just another round of golf to him. Everyone else is on the edge of their seats and nervous and anxious. No, it's just another day, another day at the factory, right? He's just done it so many times, right? And he come up a little short. Okay, he still made a million or two. He had a good day. He had a good time. It's not gonna, it's very comparable. But if you're in here and you're getting a dopamine rush from, you know, after every shot or after every trade, you might want to stop, think about what you're doing, think that through a little bit, because we just do not encourage that. Don't suggest that at all. Right? Makes sense. If there's any other question, I'll wait for a couple of minutes and then we will need to turn down. I'm sorry, but from a daily interval, talking about these stocks here, the daily trend is down. Could we get a vicious rally for the next few days or even this week into Easter? We could. Volumes are going to be thin, easier for them to do that. Could it sustain itself into a rip on a daily? Yes, but the probability is that we're going to break that and it'll be right back down the other side and maybe take out those lows. That's what the probability mapping tells us. And if but we're going to go where the money goes. Any other question? We'll wait. We also have other radars. Let me just show you just very, very quickly. We have one that we're very proud of, and we had it before Swing Machine. It's called the Pebble Beach. We haven't looked at it today. We'll look at it together. And let me show this to you. Here it is here. This is Pebble Beach. And check this out. So here are the S&P 500. These are all buy triggers today. All buy triggers. And I'll scroll down and show you how many there are. So you like to trade stocks? 71 buy triggers on stock. Now, they're all today. This trade purse represents a $10,000 purchase or short signal. Now, you could have used options, which is what we'd be using. It gives you the symbol, of course, it gives you the entry price, it keeps track of the profit, and it also gives you a stop level. 71 currently, real time, 71 signals, and every single one of them is in the money. Every single one of them. And tomorrow there'll be a bunch more. There'll be long or short signals. Every single one. So here is JB Hunt. And I got news for you. That looks really, really good to me in my eye. That is JB Hunt, right? I just clicked on it. Yep, 137. The entry on JB Hunt was at 128, 128.83. And that signal may have carried for a couple of days in here. But also too, how do you profit from here? You can certainly buy shares. You could certainly buy a call. But do you know how to sell put credit spreads and where to sell them? You might do better, right? It isn't everything is, and you want to learn how to make efficient use of your capital. And that you have to learn. It's just like anything else. There are certain tools that are available. So getting the direction and the timing, everything, that's all good, but do you structure your option trades right? Are you getting them in the right place? Are you getting them timely? You need to be. You need to be. And we made the YouTube videos. You can go back and see it. You can see it real time. Last week we used Swing Machine. We showed you exactly where and how we did it. The S&P was in panic sell. The VIX was in euphoria and the skew was in euphoria on Monday morning. We bought 2 call options on Monday morning last week at 49.70. 49.70. That was quite a bit of money, but the next day we took one of them off for a 50% return. And this morning, we took off the second one for over 100% return in a week. Yeah, we don't, we will spend, a good, actually the good, we will spend a good few hours to the first day, first 1 to 2 days teaching you swing machine, what all these categories are and how they work and where they come from and how they're put together. um, and then ideally we kind of want that first week of Q school person trading this, but I just don't have the luxury of doing that here. So again, I just want to say thank you. I wish everyone the best. Be sure to visit our little site, stockmarketcaddy.com. You're welcome to call. Be sure to look at it. I would hope if you got specific questions. Um, the monthly membership, you get to see the algos every night, and we have a gentleman. His name is Daniel. He's from Norway. Going to keep his privacy, but he was a monthly member for 3 months, and then back short time ago, actually last week was his first week, and he's an options trader. And he said, Don, I'm ready to do the Q school. And last week was his first week. And we in serviced him on Swing Machine. And he was trading just one contract of the ES, one contract of the NQ, and and 10 contracts of the euro. So he was using the same amount of margin. I mean, it's only roughly 25, 30,000. On Monday, he produced a profit for himself. I mean, I can show you. We will probably mark private his scorecard. I'm not going to disclose his name, but his net was about 25,000, and his profit factor was 650. 650. He made $650 for every dollar he lost. Now, I think he traded Tuesday and Wednesday, and he came back down to earth. And I think he made a couple grand on each day, and had profit factors, well in excess of three, but multiple. But he's a person that has been doing some trading, right? And 90% of short putts don't go in the hole. You got to at least get it to the hole. And at least for Justin Rose the other day, he missed the putt, but at least he got it to the hole. You don't know if you don't try. Thank you, everybody. We got to run. Thank you, Clark. Thank you for stopping by. We wish everyone the best. Be sure to push the like and the notification button, because when we punch up like this, we don't have a set schedule. I don't have deadlines anymore. I don't have schedules. And we're around these markets all the time. Could be late at night, could be early in the morning, could be in the afternoon. For right now, that's just the way it has to be, because we're so busy with our own trading, with our Q schools, and for our members. So I've tried to keep a hard schedule, but I can't. So um, you're very welcome, DT and Clark. And I wish everyone the best. Thanks.